Mike Styles, what are the options if the market crash and I buy a $500,000 house, lower by 350? What, Mike? I don't see a crash coming. I mean, your option would be that you sell the house, short sell it for less than you paid for it or owe on it, or you let it go. I mean, those are your two options, or you try to modify it. Outside of that, there are no options.
Well, Jeb,
Uh,
let's use Mike's hypothetical as an example. Is it going to drop in the next year? No, it's not. So let's say that it moderates from 12% growth last year to 5%. That $500,000 house is now worth 525. You paid it down $12 or $15,000. So now instead of owing 480, you owe 465. So let's say it doesn't crash next year. It goes another year. Now you're worth 550, 560, and you've paid it down to 450. You're not getting a 30, 40, 50% crash. At some point in the future, you get a 10 to 20% correction, but it's from that future value. It's going to be,
right.
in this hypothetical example, 560, 580, $600,000. So if it drops 15%, it's worth 510. You paid 500. I get it. I totally appreciate and respect that all of you guys here are trying to be smart and not do crazy things. And a lot of it may be because being of that millennial generation coming into prime home buying age, what did you see? You saw your parents, your friends' parents, people lose homes. It was all over the news. It was a big pain point, and you're trying to avoid that. That was a very different situation. That's not to say that we will never see a correction or a downturn in home prices. We will. We're never going to see a home price crash again that resembles anything like what we saw in 2008. It will be a correction of 10 to 20%.
All right, there you go.